PayPal co-founder Peter Thiel sounding an alarm on Bitcoin. Speaking at a Nixon Foundation event, Thiel said, quote, "I do wonder whether if at this point Bitcoin should also be thought of in part as a Chinese financial weapon against the U.S. It threatens fiat money, but it especially threatens the dollar." He says he's not against cryptos, but that the government should take a closer look at why China is long Bitcoin. Bitcoin higher again today, up nearly 700% in the past year. Michael, explain this to me. How would China use Bitcoin as a weapon to weaken the dollar?
Well, I think, the general premise here is that Bitcoin's ascendance does come at the expense of the dollar's role as the world reserve currency. So if, in fact, China had some kind of participation in that trend where the U.S. dollar is not as central to the world financial system and economy as it was before, and meantime, if, in fact, official Chinese authorities are owning Bitcoin and benefiting from its appreciation, it could, tilt the financial balance of power, I suppose. It is interesting here because, of course, Thiel is very much an advocate for cryptocurrencies and Bitcoin as well. He's more or less pointing out that this becomes a little bit disorderly in terms of a power relationship thing if the ultimate destiny of Bitcoin that the true believers see out there for it as sort of overtaking to some degree existing currencies, would have other unintended consequences.
So Deirdre, you spend a lot of time in these circles and know a lot about this, so you're going to have to educate me. I get that Bitcoin is an asset that can go up and down, but does that very fact make it less likely to be a store of value or a currency that can be used in exchange to buy and sell things?
I think the idea of it as a store of value is building, even though it is volatile. You've seen this massive run-up. But Tyler, I do spend time in technology, but I also spent a lot of time living in China. And I know that it's very hard to argue that China is long Bitcoin. In fact, China sees the cryptocurrency as a bigger threat to the Communist Party, I think, more than it's worrying about it as a threat to the U.S. dollar. What they are interested in is the technology behind Bitcoin, blockchain. You had earlier this week China coming out saying it's going to be launching its own digital yuan. That may be where the real threat is. China is moving quickly on this technology. U.S. has talked about a digital dollar, but there's been no action, and maybe for good reason. There needs to be very thoughtful and planned out. But I think that is where the real threat is. And if the Chinese get their massive population to use a digital yuan, that could lead to more usage of Bitcoin. And to Mike's point, that could eventually sort of take over the U.S. dollar. All
right, let's talk next about a driver shortage hitting Uber and Lyft. Now, both are working to bring those drivers back. Uber launching a $250 million driver stimulus plan, including temporary incentives and payment guarantees, while Lyft is offering bonuses of up to $800. The lack of demand during the pandemic shutdowns led a lot of gig workers to find other sources of income. U.S. Uber drivers' logged hours fell more than 37% year over year in the first quarter, while Lyft saw a 42% drop in the same period. I guess they're just trying, Deirdre, to get the cornerstone of their business back, and the cornerstone is having plenty of drivers there so that pickups can be quick and seamless.
Yeah, so we're already seeing demand recover. Question is the supply there? This has been sort of a battle that Uber and Lyft have fought over their lifetimes, and it's really reminiscent of the good old days when they had tons, billions in venture capital funding to offer these incentives. It's interesting to see that shares are higher today. That may just be, the broader tech rally. And so far, investors don't think that this is going to add significant costs. But I really wonder if they get into this battle for drivers and eventually perhaps for riders, if Lyft sees this as an opportunity to grab more market share, if we get back into that sort of huge spending on driver incentives and rider discounts. And what does that do to the path to profitability? Markets don't seem concerned about it right now, but I suppose we'll see how this all plays out this year.
Incentives, well, we see how good they work for the auto business in many cases. Frank Holland, a question for you as you weigh in on this. How much more or less do you use Uber or Lyft today than you did 15, 18 months ago?
Well, Tyler, I think you know the answer. Significantly less. I don't think any of us are getting in a rideshare car as often as we used to before. But I actually think it's really ironic that Uber and Lyft are calling this a stimulus plan, because there's been an argument out there that people don't want to work because of the stimulus payments. So this will be a really interesting test. They're incentivizing drivers and people to get into the rideshare business. So we'll see if the thing is that people don't want to work or they don't want to be underemployed. I think we overlook the fact that the world literally changed over the last 12 months. A lot of us have reassessed our time and the value of it, and maybe even the value of what they call a side hustle.
Mike, any thoughts here?
Yeah, I mean, I would go back, Tyler, to exactly whether this arms race does compromise the case, as Deirdre said, for ultimate profitability. We simply don't know, even after all this time as public companies, whether the business models scale properly like technology, or if it really is just one of these things where they have to constantly keep pace in terms of labor shortage and not have their take rates go up.
Shepard Smith here. Thanks for watching CNBC on YouTube.